video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today I've got quite a mixed bag for you. First of all, I want to say thank you for all the well wishes and positive vibes sent my way yesterday. You'll be pleased to know I am feeling a whole heap better today, so happy days there. A few of you pointed out that I seem to get sick quite a lot, and you were asking me, have I had about 15 boosters? But no, you'll be relieved to know, no, I haven't had any, and I managed to keep my family away from them as well. Given my background as a scientist for Big Pharma, I knew right from the get-go that that was not for me. So we'll say no more on that. We're about 450 subs away, I think, from hitting 20k. So if you're not subscribed, please do that. That would mean the world to me. That'd be a huge milestone. And once again, thank you for all the well wishes. They certainly seemed to help. And even if they didn't, they certainly were appreciated. I wanted to kick things off today by pointing at a weird observation I made about the daily cycles for the S&P 500 right before we had the top come in before the 2008 GFC. If I show you the chart for the S&P 500, today is going to be day 37, and these daily cycles typically run 40 days on average, but anywhere between 36 days and 44 days would be a normal and to be expected timing window to see a cycle low. If we get some kind of sharp, steep 1, 2, 3, 4 day decline inside that timing window, okay, maybe with a slight trend line fake out perhaps, and then a recovery, then I will be more than happy that everything is going according to plan and we don't really have to be too concerned. But what I'm about to show you is a little bit concerning to me. Going back to 2007, this is where things get a little bit strange for me, okay? So this would be the equivalent to the summer top we had. This would be the equivalent to the yen carry trade unwind. Then since then, we've kind of started to rally up here. But now if I zoom in, what do you notice about the cycles? If we measure this cycle, okay, it did not give any clear, identifiable cycle low. And in fact, went all the way to day 39 before then ultimately giving a very, very late 46-day cycle low. That 46-day cycle low then left translates on day 7 before rolling over and failing, and that was the top, okay? Then we started to enter bear market territory. We get a cycle inversion here. This throws a weird count again. But notice all of these daily cycles are left translated and failing. So the point I'm trying to make here is, at the moment, okay, we are looking very, very similar to this. We are currently right in this neighborhood, okay? We're on day 36-ish, and notice where day 36 forms, okay? Right here, right around the prior all-time high. And now when I hop back today, again, we are now on day 36, and we are not really significantly higher than the prior all-time high. So I guess the point I'm trying to make here is, I really want to see a nice, clear, identifiable cycle low show up in the next few sessions. Like I really want to see a nice, sharp, sudden drop. Whether it holds support or briefly violates it, then I want to see a swing low and continuation. And if we get this, then I'll be able to say, okay, well, based on the daily cycles, this looks exactly how you'd expect it to look. It looks like every other one, okay? Pullback, daily cycle low, and off we go. Pullback, daily cycle low, and off we go. You can see that here, here, and here. But what I don't want to see is a repeat where we don't actually get this kind of cycle low. We just kind of do something like this, meander around for a bit, and we're thinking, okay, well, where's the cycle low? Because that to me will tell me that the next cycle low, when it forms, if it forms late, we'll probably be looking to left translate and roll over. Now, again, the plan is the plan and the strategy is the strategy, right? Lose this third and final angle and we should be able to look for shorts, should be able to at least exit the market. And then if you wanted to play it safe, you could wait to see if the second angle breaks down and look to get short here. But I am a little bit on guard here if we do not get a sharp decline into a cycle low for the stock market. And again, if we kind of round here, like I was just suggesting, like we did back in 2007, then zooming out a little bit, this will have all the familiar symptoms of a distributive top. Did I say that right? Of a distributive top. And we'll be probably looking for something like this. Now, I know the blow-off top gang are not going to like this idea, and they're going to be saying, no, we're 100% going higher, 7,000 for the S&P and all of that kind of stuff. But if we lose this third and final angle, if we start to not see a cycle low show up, then I'm going to have to be thinking that this market is close to topping. And something else that doesn't quite sit right with me is we are very late in that cycle, as I just showed you. We're on day 37, so we should be looking for a cycle low for the stock market to show up in the next, I don't know, 3-4 sessions at the most. And look at the VIX. The VIX is continuing to sell off. So if this cycle low was coming, and if we were going to get that normal and to be expected sudden drop into a cycle low followed by a swing and a reversal, would we not be expecting this VIX to pop up a little bit? Because normally that's what I'd expect to see. But instead we haven't had that. We just got volatility falling. which makes me think if indeed that cycle repeats as it did in 2007, then we're probably going to get something like this and a breakout. And as soon as we break out of that trend line, I think I'm going to use that to get some hedges on. The next thing I wanted to share with you is in black, we got this global LIC index, which is breaking out. And historically, this has seen Bitcoin do Bitcoin things. But fitting in with what I was talking about yesterday, with the difference of liquidity and outright QE with Fed balance sheet expansion, this GMI Weekly Global Liquidity Index focuses on public liquidity, specifically central bank balance sheet in net liquidity terms. But as I was saying yesterday, okay, this is the credit and liquidity program of the balance sheet, and we can change this drop-down menu to the total assets of the Federal Reserve. So this is the Fed balance sheet right here. And what do you see at the hard right edge? Because what I see is they are still deep in the middle of balance sheet runoff. They are still tapering the balance sheet, which is incredibly different to the prior times we saw it. If I move my cursor to the right place, you can see possibly down the bottom, it says March the 2nd, 2020. Look at the sudden spike in balance sheet expansion that coincided with this right here, okay? The low comes in, outright return to QE and Fed balance sheet expansion. That's when Bitcoin does Bitcoin things. So yes, other central banks around the world may well be expanding their balance sheet. They may well be engaging in printing, and global liquidity as a whole may well be breaking out. But again, I am here to suggest that under the hood, okay, things are not equivalent to the last time we saw printing and liquidity increasing. And again, this is what I believe is the subtle nuance that people need to understand. It's one thing, and it sounds cool, don't get me wrong, to say printer's coming, Bitcoin to the moon. Okay, I get that. I want that as well, in a way. I don't want people to suffer inflation because I don't think people can handle any more inflation, frankly. But without this return to balance sheet expansion, I don't really see a repeat of this occurring. Something else that's quite interesting is interest rates at the moment. Notice how we are currently pricing a 62% probability of a 50 basis point cut. So this still fits in with the theme that the Fed is going to be more and more aggressive to cut. Okay, they're not done a 50 and now they're talking about a 25. Probably we're going to see a 50 and then 75s. We may even see 75s at November's meeting, particularly if these tops start to come in for the stock market. And fitting in with this theme of drawing parallels to 2007, to be clear, these are technical parallels. This is not me necessarily saying we've got another subprime mortgage crisis or the things under the hood are exactly the same. That's not what I'm saying. But what I am saying is when we pull up the charts and look at the technicals, undeniably that S&P shape is very, very similar to today. The unemployment rate in black here is very, very similar in shape to how it was back in 2007. And in green here are the Fed's projections. So the Fed back in 2007 thought that this is what unemployment was going to do, just like today it thinks this is what unemployment is going to do. So you can see in 2007, its projections were 4.7 to 4.8, then 4.6 to 5, then 4.6 to 5, then 4.6 to 5. But what they actually saw was 5, 7.3, 10, 9.9. So the real results was double what the Fed was projecting. And today they project somewhere in the neighborhood of 4 to 4.5%. All the way out to 2027, when I make the case it is entirely possible we're going to see this thing spike just like we saw back here. So they are probably going to start to cut more and more aggressively. Unemployment is probably going to turn out to be completely wrong by the Fed's projections, as it usually is. Remember, inflation is coming down and we get to see the CPI print in about 2 weeks' time. And all of this occurring with an eerily similar repeating pattern in the stock market. Now, again, we can easily invalidate this, okay? We can easily invalidate this. All we have to do is find some kind of cycle low, bounce out of here strongly and rip to new highs, okay? That's all we've got to do. And by the time we set a new high somewhere in this neighborhood, I'll be saying, okay, happy days. We're technically no longer that similar. We're looking for a blow off top and hopefully we can get out much higher up. But I am extremely internally conflicted at the moment because I am long and strong across the board, right? I am long and strong the stock market via multiple instruments. I am long and strong gold. I'm long and strong Bitcoin. I'm long and strong crypto related equities in the members section. I even added another crypto-related equity yesterday, and yet at the same time as I am long and strong across the board and have been this entire way up, I am internally more bearish than I've ever been. And so at least I'm not letting my gut get the better of me. At least I am still trading the chart in front of me, right? The charts are bullish and therefore I remain long. But if you've been following me for any length of time at all, you can probably tell that there has been a significant shift in my approach to markets, right? I have been mocking bears, I have been mocking doom posters, I've been mocking recession callers the entire way up. We coined terms like the double top gang because we knew in this neighborhood there would be a whole heap of double top callers. But now finally that we are here, I am slowly but surely just becoming insanely bearish. And that doesn't mean I'm going to stop going long, okay? As always, I will trade the chart in front of me and I will let the chart break down first and give me a technical reason to actually start to trade to the downside. But the more this kind of thing is shaping up, the more I feel very, very bearish. So it's an incredibly wild time to be alive. It's an incredibly challenging environment. It's very, very hard when you're as bearish as I am and when you see a recession like I do to remain long across the board. And so you can see there's a lot of confusion in the market, right? Allegedly, here is the current situation. Stocks are rising like there's a soft landing. Gold is rising like we're in a major economic crisis. Bonds are falling like the Fed is done cutting rates. Real estate prices are rising like rate cuts just started. Oil prices are falling like demand is disappearing. Natural gas prices are rising like demand is growing. Nothing adds up here, right? I think this is a terrible take, to be completely honest. Stocks are rising like a soft landing has happened because so far, that is what's happened. What is a soft landing? It is a return of inflation to the Fed target without a recession. Well, so far, what we have is indeed a soft landing. Now, we can change that and we can change that very quickly. I still think a recession and a hard landing is just around the corner. But for now, at least, we are indeed having a soft landing. Gold has been on a great run, yes, but the top is very close. We know that weekly cycle is coming just around the corner. The bonds falling like the Fed is done cutting is nonsense. This is just a counter trend move within a primary trend. Real estate prices are rising like rate cuts just started. Well, yeah, but they did just start, so that makes perfect sense. Oil prices are falling like demand is disappearing. Well, that's because under the hood, demand is disappearing, and CPI is nowhere near as sticky as people think it is. And meanwhile, nat gas prices are rising like demand is growing. Completely false. Totally bogus. Zoom out. This thing is trading in the same range it was since all the way back in January of 2023. So nothing adds up here? I don't think so. I think everything makes perfect sense. It's just we are very late in these long-term cycles and a hard landing is likely just around the corner. And so the big question is, what does this mean for Bitcoin? Can Bitcoin decouple? Is Bitcoin going to get hit with this recession? Is there one more pump, one more hurrah? And the honest truth is I have no idea. I have absolutely no idea. But I do know that since the 73k peak, the number of people willing to sell Bitcoin has dropped to a minimum zone over the past 6 months. So very, very few people apparently are willing to sell here, which makes you think there is a very high probability that the price will approach that 73k level again. And if it does, there is still a whole heap of shorts waiting to be liquidated up there. Does that translate to a marginally higher high and then a rollover, or can we indeed get some kind of big escape velocity push above 100k? That is, of course, the million Satoshi question. And as ever, I think the only thing I can really do is just keep taking this thing one day at a time, keep treating each asset class on an individual basis. I had a request to cover Bitcoin dominance, so here it is. Honestly, I don't have anything to say about this apart from no changes. Until it can break down of this upward sloping red resistance line, then it's just staying above the resistance, isn't it? Like, there's nothing to say until it breaks down. If you get a breakdown, hopefully your alts can pump. And I say that sincerely because I want you guys to do well. And I also want you to be aware that if this thing continues to squeeze up like my yellow fractal, which is just an arbitrary fractal, but if it continues to do this and then something breaks and then we enter a recession, are you really going to see rotation into alts and higher risk assets, higher beta assets? I don't think so. So I just want you to be aware of both, okay? I want this thing to break down for everyone else's sake, and if it doesn't, I want you to be aware that the flight to safety is likely Bitcoin, not altcoins. And so what else is there to say, really? Okay, we've already kind of done it. We want to see a cycle low for the stock market for sure. And if we don't, then I think we're probably going to have to entertain something being wrong under the hood. I'd like to see the VIX pop up, but given that we're approaching Friday and this thing normally gets crushed into Friday, I can really see myself starting to add some hedges here in the next few sessions. Notice how the Russell 2K still doesn't want to escape just yet. So maybe it's coming. Maybe it just needs to find a cycle low and go. Gold is absolutely relentless. I was talking about in the members section yesterday, choking this stop up, and I'm going to continue to choke it up and let this thing take me out for a profit when it decides to take me out. For now though, long and strong there. Silver, 32, happy days, right? Probably getting a little bit late in this cycle, going to be looking for that weekly cycle low soon, but we have exposure via silver miners in the members section. So again, long and strong there. Bitcoin actually looks quite bullish, to be honest. Day 20, so half cycle low due sometime around the 6th of October. And all it really needs to do is print a higher high, and then I think a breakout is very much on the cards. For now though, we still do have a lower high. And the dollar looks to have left behind a daily cycle low now, and also looks to be wanting to fail this daily cycle and start to head down below that 100 level. So this may well be the saving grace. If we can indeed get a cycle failure here, a loss of that key 100 level, then we may just be able to avoid that 2007 rollover that I was showing you earlier on. We may just be able to see a big push to the upside, and that may just catalyze Bitcoin to start its moonshot.
yields are almost ready for their next leg down. That makes a lot of sense, and of course as the yields come off, that is also conducive to rallies in risk. So under the hood, the setup looks okay, right? And I am still long and strong, as I've said a million times, but I think you can probably tell, right? I'm getting twitchy up here. I'm not going to lie. I always try to keep it as real with you guys as possible. I like to try and be as transparent as possible. I like to try and show you what trading looks like in the real world, okay? And right now I am getting more and more twitchy. That doesn't mean I'm going to allow these emotions to get in the way of my trades. It doesn't mean I'm going to start selling if I don't get true sell signals. As ever, I have a strategy. I stick to that strategy. Whatever emotions I do feel, I completely abandon them and push them aside so that I can trade objectively and unemotionally. But whilst I'm making content for you, whilst I'm observing things like the rate cuts and the bond market and the macro setup and the unemployment data, you know, I'm free to have as much emotional response as I like. And as you could probably tell, right, I'm getting more and more bearish here despite being long across the board. But I kind of trust myself on this, right? I think I have good reason to be postured this way, and I think I have good reason to feel the way I feel under the hood. So there's nothing easy about it, but one day at a time as always, and we'll get through it. I'm your boy Camel. I hope you're doing well in life, and until next time, take care from me. All the best. Cheers. Bye.
Camel Finance, he's the man to see, rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame, sticking to his guns in his money game. He's a badass, oh yes indeed. Camel Finance got the markets key, taking us normies on